Good evening, everyone. Sorry, I was having issues joining from this system. I restarted my system, so everything got logged out. So I had to log in again. All right, so welcome, guys. I really appreciate the consistency. I really appreciate the fact that each and every one of you are showing up every single day. It shows how committed you are to the journey of trading. Okay, so yeah, without wasting further time, I would want us to quickly dive into what we have today. But before then, let me quickly share the link across other
No,
platforms.
no. You don't be now I will there. See, you should be na.
Please mute yourself.
Yeah, I know that.
Okay, so congrats to Man City on their victory. Arsenal fans, so sorry, so sorry that you guys were not able to get it this time around. I don't know if you guys have even gotten it before. So if you're an Arsenal fan, so do well to console yourself. Feel free if you want to cry, you can leave the you can leave the call and go and nurse your tears. Okay. So let's forge ahead. Okay, let's go. Arsenal fans, sorry for you. All right, I just shared the link across platforms and then we should be expecting more people to join. Yeah, I gave you guys assignments yesterday to submit on the platform. Most of you have submitted and you guys did amazingly well. Okay, you guys did amazingly well for um at least for a start. Okay, identifying structures, identifying break of market structure. Yeah, I know the screen is blank. Yeah, I'm trying to log into my private uh mail, so I don't want you guys to. So where did we stop yesterday? We stopped at where we're looking at break of market structure, shifting structure, and then what else? What else? Who can remind me? Break of structure, shifting structure, and then what again? The last one, change of character. Correct. Okay, change of character. Okay, so I believe you can see my screen now. I believe you all can see my screen right now. So yeah, I believe you all can see my screen. You can see my screen and then we can forge ahead. Okay, today we'll be doing more of candlesticks and then what again? Let me quickly open the course guide. Okay, so I don't teach you guys one thing two times. Okay, I don't teach you guys one thing two times. Here we have it. All right, so today we are going to be looking at what Fibonacci. Then we'll continue from where we stopped in support and resistance, where we've learned how to identify okay, we still have to learn how to identify patterns. Okay, and then we'll look into demand and supply, Fibonacci indicators, and then multiple time frame analysis. Okay, which is where we'll combine these two together. We'll also learn how to analyze the market. Okay, so let's just quickly run through. At least if we're able to do 3 sections today, then we can call it a day. All right, so we spoke about resistance, we spoke about trend lines serving as support. We spoke about trend lines serving as resistance when you draw it from the bottom, and trend line serving as support when you draw it from the bottom, then trend line serving as resistance when you draw it from the top. Okay, so yeah, then horizontal support. I think we've not gotten to all this place. This is where we stop. Okay, we stopped at change of character. Okay, so a change of character is when price breaks the previous established pattern in a sign of potential reversal. For example, a change of character is when price make a lower low after being in an uptrend or when price make a higher high after being in a downtrend. Okay, so we're able to identify it here. Okay, this is let's see here. Okay, if I'm going to use this, which one should I even use among all these ones? Let's go to GBP USD. I think my network is slow today. Okay, so this is a clear change of character. Now let's look at this price action here. Okay, what can we see? We can see that the market is trending down, creating what? Lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. Then a change of character simply implies that when the market stop creating lower highs and lower lows and start creating what? Higher highs and higher lows. So now this is a change of character. Okay, the moment price from this low point here, we had what? A new higher high. Okay, because the high was higher than this previous high here. Okay, so if I'm going to mark it out, I'm going to mark it out this way. Okay, I'm going to mark it out this way. And then you can see that we had a clean change of character right here, giving us a new higher high. Price came back, retested the previous high, gave us a higher high, retested, gave us another high, and so on and so forth till current price. Okay, so now this can clearly be seen as what? A change of character. Okay, let me mark it out. You can call it CHOCH. Okay, which is a change of character. Okay, and then this one here will be a break of structure. Okay, will be a break of structure. Okay, so the first shift is a change of character, and then the next higher high is what? A break of structure. Okay, so you should be able to differentiate between a change of character and then a break of structure. This was also in our assignment, and I will check how many of us actually got it correctly. How many of us were able to identify what? A break of character and then a change of structure. I said 3 each, and then highs, lows, bearish market, bullish market, and then ranging market. Okay, so let me see how many of us were able to identify this properly. Okay, so moving on. Okay, moving on. Let's see, change of character, support. Okay, think of support as a floor beneath the price. Okay, and then think of uh it's a price level where the market has historically shown a strong tendency to stop falling and start rising. Trader believe that at support level, there is enough buying interest to counter react selling pressure, preventing the price from going lower. On the other hand, resistance is like a ceiling above the price. It's a price level where the market has historically struggled to break above. Traders believe that at resistance levels, there is enough selling interest to counter-react buying pressure, preventing the price from going higher. Okay, so we've spoken about this yesterday. Okay. Um, okay, someone saying wasn't actually stable in the meeting yesterday. Please throw more light in the difference between a change of character and a break of structure. Okay, I'm going to go through it one more time using this example we have here currently. Okay, like we say, the break of structure is when price does what? What is the break of structure? When we say price is breaking structure. Okay, a break of structure is when price breaks an already existing high or low in the direction of the trend. Okay, remember it must be in the direction of the trend for it to be called what? A break of structure. Okay, so now a break of character is the first break in the opposite direction of the trend. Okay, in most cases is a reversal pattern. Okay, in most cases is a reversal pattern. So when you see the market is creating a series of lower highs, lower lows, and then we have a break that gives us a new what? Higher high. Okay, that is not a break of structure. That is what? A change of character. Okay, Now it is when price reacts, tap the resistance or the support level at that previous high or previous low, and then break the formed high, okay, that was caused by the change of character, then we can clearly say that the market has broken structure, okay, and then we can see price deliver to the upside. Okay, is that clear enough? Is that clear enough? Do you understand it? Is that clear? Okay, or somehow clear? Okay, you can still ask a question on the chat group. People there will still be willing to assist you in understanding it better. Okay, so we spoke about trend lines as resistance. Okay, so trend line in this case as resistance is simply a case where we have price react. The only way trend line can act as resistance is in a downward movement. Okay, so it is seen that resistance is at the top and then support is at the bottom. Okay, so when trend line is acting as resistance, is a clear understanding that price is bouncing off at the top area. Okay, something like this. Okay, from this level is holding as resistance. Okay, and then all of a sudden we had a breakout of the trend line and also a break out of resistance, giving us a new upward move. Okay, and then when trend line is acting as support, is at the bottom part, holding price to further push the price to the upside. Okay, held there as support, held there as support. Most likely, if price comes back to this trend line in future price, it might most likely hold as what? Support. Okay, so let's see how price reacts to this in the future. Okay, so this is the way it is. It held here, found support here, also in this place found support, and then it has pushed up. Okay, so when next price comes back, it might most likely hold as what? Support. All right, so that's it for trend line holding as resistance here in a downward trend and then holding as support in an upward trend. Okay, so trend line as support and resistance. We've spoken about that. Then the second way or type of identifying a support or resistance level is horizontal support or resistance level. Horizontal support and resistance level are significant price level on the chart that act as a barrier for price movement. Unlike trend line support and resistance, which involve drawing lines at angles, horizontal support and resistance are represented by horizontal lines. Okay, horizontal support is a price level at which the market has horizontally shown a strong tendency to halt a downtrend and reverse to the upside. It acts as a floor beneath the price where demand for a currency pair increases, causing buyers to step in and push the price higher. This support level are seen as potential buying opportunities. Horizontal support. Now let me explain this quickly. Okay, if you go over to the chart, you see certain levels. Now let me switch this to the line chart. Now let me show you the importance of having uh the line chart also, which we explained, was it yesterday also? Okay, which we explained yesterday. All right. So now there are certain level. This is not a horizontal chart. Okay, this is not a horizontal line. Okay, but rather this one here crossing through is a horizontal line. Okay, so now let's see how it serves as what potential support and resistance level. Now let me bring out another chart. Euro USD. Okay, Euro USD. And then one thing I want you guys to understand that horizontal support and resistance is not really a line, but rather it's a zone. Okay, it's not really a line, but rather it's a zone, just like this rectangle you are seeing here. Okay, I used it to get my horizontal levels. Okay, so let me clear this and then let's look out for horizontal support and resistance levels. Okay, so it's best to use a rectangle tool. Okay, so you can mark out the zone properly. Okay, so this is the way I do it. I mark it out this way. Okay, so price held here, okay, and then it's ranged here, okay, but this is not a clear one. Okay, let's look for a more clear zone. Let's see this level. Another way to identify it easily is by using the line chart, which we explained 2 days ago. Okay, so we are looking for those areas where price bounced off multiple times. Okay, you can use the line and then you modify it. This is one area here, this is another area here. Okay, this is another area here. Okay, one thing you need to understand is you're looking out for what turning points. Okay, you're looking out for turning points, those areas where price got to and then change direction. Okay, we can see here also, but we didn't really have a major turning point here, so just slow down price. Okay, it's not really a major turning point. Okay, major turning point is what we're actually looking out for. All right, so and then when you switch back over to the candlestick, you can get your areas correctly where you can drop your what horizontal ray. Okay, you can extend it to future price, and now we have our markups. Okay, I can also draw this here this way. Okay, can also draw this way. Can also draw this way. Okay, as the case may be. All right, so you can see that price got to this place and then push up impulsively, came here, held as what resistance, reacted a bit, and then broke through it, found this new area as what resistance, pushed down. Here now became a new found support. Then from here, it pushed back up, breaking through the resistance. You can see how price wanted to come back down here, but the buying pressure was much. Okay, broke through the resistance and then came back here and then found another resistance. Okay, it came down, broke through it, held it here as resistance, and then pushed price all the way down back to this level of potential support. uh Break through it slightly and then came back, retested it as support, and then pushed back up close to this resistance, reacted, came back down here. Okay, you can see how well price is holding as what support. Okay, held here as support, broke through, came back here, held here as resistance, pushed down, broke through it, came here, held here as support. So the next area where we'll most likely see selling pressure will be at this level here. So even if you are going to buy Euro USD, you can buy and then look to take potential profits at this next zone of what resistance. Okay, so this is the way you get what support and resistance level. Okay, so you can have an entry this way and then look to secure your profit at this next resistance level. Okay, so and then if you're looking to sell, you can sell and then look to secure your profits at this next support level. Okay, so it's just as simple as that. But you need to actually look into certain things, certain perspectives, certain candlestick confirmation before you can execute your trade. Okay, so it's just as simple as this. All right, just as simple as this. Once you found major key zones where price has turning points, then you can systematically enter and exit your trade based on those guides. Okay, so it's just that way. All right, so let's see. Let's forge ahead. Okay, so horizontal resistance, similarly like a trend line price, can break through a horizontal resistance price level, and that level can turn to support for price. Okay, which is what we clearly saw here. Okay, when price broke through the particular level, okay, you can see here, it broke through it, held here, broke through it, and then found resistance and then pushed all the way down. Okay, here also you can see here it was a previous resistance, price broke through it and then came back down here as what support. Okay, so these are things you need to understand Well, most of the time we call them flip zones, okay? Flip zones, resistant turn support or support turn resistant zones, okay? The third way of identifying a possible support region or resistance is by dynamic support and resistance, okay? Dynamic support and resistance are unique type of price level in forex trading that changes as the market evolves. Unlike horizontal support and resistance, which remain fixed at specific price points, dynamic support and resistance adjust in real time based on the current price action. Dynamic support and resistance is represented by a technical indicator or moving average that respond to the market price movements. As the price changes, this indicator recalculates and provide new support levels. When the price approaches dynamic support, it suggests a potential area where buyers may step in, leading to a bounce back in price. Okay, so now this is where moving average is coming. Okay, so you can see this moving average I used was properly selected out of several considerations. Okay, so now you can see here that it's not every time it works, okay? Uh, it's not every time it works, but when it works, it works, okay? There's no strategy that's 100%. All right, so you can see here the moving average reacted here, held here as what? Support, okay? Came back here, retested, held here as support, had a break, and then came back, held there as support, pushed. We had a break out of the moving average. It held there as support. We had a break out, and then held there as support, held there as support. So if you're actually trading moving and once price gets close to the moving average, you look for your entries. You can better time your trades. Okay, that way you can better time your trades. All right, so I just use it in confluence to what my already established knowledge for market structure. Okay, so if I'm looking to use moving averages, I use them in confluence to what market structure. Okay, I don't just trade them alone. I trade them in confluence to market structure. All right, so they serve as what dynamic support and resistance level. Okay, they serve as dynamic support and resistance. So you can see here it held here as support, held here as support, held here as support, broke through it, tried to hold here as support. Price finally broke above, held here as support, held here as support, held here, and then we had a break, and then you can see how it's actually reacting. Okay, so if you have solid knowledge of price action, you will notice a potential support level at certain touches of the moving average. And most importantly, I use them on the 30-minute time frame to better time my entries. Okay, so on the 30-minute time frame, it does a better work. Okay, someone is finding it difficult to connect. I just saw the message on the group. Okay, so I use it on 30-minute time frame and it doesn't really um try again. It doesn't really give me much stress whenever I use them. Okay, because I use them with already knowledge in market structure. Okay, so once I get this confirmation from my candlestick with a double bottom engulfing pattern, and then I'm seeing, okay, price is actually breaking, I can take an entry from this level here, a long position entry from this level, and then when price successfully closes above my moving average, I can start trailing my stop. Okay, I can start trailing my stop with my moving average. As price is going, I can follow price till price touches my moving average. Okay, so these are things you need to consider. So if I'm looking to take a 1:2 position, that's how I end up taking, rather than a 1:2, I end up taking 1:4, 1:5, as the case may be. Okay, so if I'm looking to take this trade, if the 1:2 risk to reward, okay, if the 1:2, I may end up having up to a 1:2.8, 2.9, as the case may be. All right, so you need to understand they don't only work as dynamic support and resistance, they also work when you want to use them to trail your stop. Okay, so yeah, and then when price is coming back, Once price breaks above, we have that impulsive push, and then it gives me further confirmations to hold my trade in the direction of the trend. Okay, so yeah, dynamic resistance. Our fourth and last look. Someone just dropped a message. Okay, who else don't understand all this with me? Okay, you don't understand. What part don't you understand? Okay, what part don't you understand? You can ask your question and then we will take a step backward and then see how we can carry along. Okay, just ask your question in the area you don't understand. Okay, dynamic resistance, the turning point. Okay, when it comes to the moving average, right? Okay, let me just use this few minutes to explain, and then though we're already out of time, let me use this few minutes to explain. Okay, now there's a strategy most people use. It's just that nowadays what you guys hear out there is ICT, SMC, and the rest. Okay, initially, yeah, what we were hearing in our own time were moving average crossover strategy. Okay, when a smaller moving average will cross over a bigger moving average. Okay, let me show you guys an example. Okay, moving average. You can use more than one moving average. Okay, so I'm going to drop another moving average on my chart, and then this. Let me make this 50. Okay, so there's what we call the moving average crossover. Okay, it's a strategy that most people use initially. Once you have a crossover this way, is an indication to buy. Once you have a crossover this way, is an indication to sell. You have a crossover this way, an indication to buy. Crossover, indication to buy. Okay. Uh, the network is very, very bad. Okay, so these are strategies that people were using, and most people still use them till now. Okay, you have crossover like this, an indication to buy, crossover like this, indication. Okay, this one didn't really crossover. Okay, crossover like this, indication to sell, crossover like this, indication to sell, and so on and so forth. Okay, so crossover like this, indication to buy, crossover like this, indication to buy. Okay, so all these are strategies that most people use. Now, the moving average has actually crossed over here. It's actually an indication to buy. So we may most likely expect price to touch it a bit. If it doesn't cross over back, then we may expect an impulsive move to the upside. Okay, so that is the way this whole moving average stuff works. Okay, it works in the direction of the trend. Okay, if the market is trending up, the moving average too will be going up. Okay, if the market is trending down, the moving average too will be trending down. And then you just have to be very, very careful. That's why you need a solid knowledge in market structure. Okay, so you know, because there are times where the moving average will be in the middle. Okay, it's not going up, it's not going down, it's just at the middle. So there are some at that point you need to have a solid knowledge of market structure to understand if there's a shift in market structure or there's a change in market structure. Okay, so you need to understand all these certain things. Okay, so yeah, that's it. I don't know if you understand. I don't know if you understand so far. If you understand what I say, just drop 111 in the chat section. Just drop 111 in the chat section so that I will know that you understand. Okay, 111. All right, so let's forge ahead. Okay, so support and resistance zone. Like I said, instead of using a thin line, you can use a zone. Okay, so support and resistance zone serve as crucial area on a price chart where traders often observe historical reactions in the market. Instead of focusing on individual price points, those zone encompasses a range of price that have exhibited significant support and resistance activity in the past. Support and resistance zone take into account a wider range of price, recognizing that traders may have not always may not always react exactly at specific level. In drawing out a support or resistance, we must put into consideration multiple what touches, okay? Multiple touches, which is very, very important for what drawing out your support and resistance level. Okay, so if price is reacting just once, it's not enough to show a validity of support and resistance. That is why I'm using this zone. Like I explained earlier, you have to use a zone and then you watch out for what multiple touches. Okay, touch one, touch two, touch three, touch four, touch five, touch six, touch seven. You had a breakout, came down, touch eight, touch nine, and then we had another impulsive push. Okay, so these are things you need to consider when using what support or resistance level. Okay, you need to see those multiple touches to validate that area. Okay, to validate that area. And then when you see a break, you expect price to most likely continue in that direction after coming back for a retest. Okay, so resistance zone. Also for resistance zone, we got to see the zone where previously a support or a resistance zone broken and serve as the opposite. For example, a zone that previously served as a resistance zone for price later broke that zone and retraced back into that zone and got supported from that zone to continue upward. Those zones are referred to as either flipping zones or zone flipping rows or zones or pivot zones. Okay. So when you see price break out of a particular level of what resistance and then use that level of resistance as what potential support, they are what we call what the flip zones. Okay, they are what we call the flip zones. So support turn resistance or resistance turn support. Okay, it's just as simple as that. Don't get it confused. It's very simple. I know if you understand, just drop 111 in the chat section. Okay, just drop 111 in the chat section so I know that you understand what flip zones are. Okay, you understand what flip zones are. Drop 111 in the chat section. Okay, so that's nice. Let's forge ahead. Okay, so flip zones or pivot zones. As traders or as a trader, the understanding of support and resistance help you to identify potential entry and exit points, spot trend reversals, and manage your risk. Where to put your stop loss and take profits. As you gain experience and combine support and resistance with other technical tools and indicators, you develop a well-rounded trading approach that can lead to more informed and confident trading decisions. Okay, so as a forex trader, yeah, your confidence is gained out of experience. Okay, you don't expect to come to a field where you have high intelligent robots. We have normal EAs. Now listen, these are things you are going to be competing with as a forex retail traders. You have Dr. Bill robots to compete with. You have my own robots to compete with. You have HFTs to compete with. You have banks and hedge funds that use high level artificial intelligence. You have regular retail traders with huge funds to manage. You have yourself. Okay. So how do you feel that, okay, you just come into the market and then you want to become a millionaire overnight with the knowledge you have? Okay, you need to gain confidence in your strategy. You need to gain confidence in yourself as a trader. All right, so by doing so, you learn the necessary things and you keep on implementing them every single time. Okay, so gaining confidence as a trader requires that you backtest your strategy over and over again. Okay, so let me quickly let's just talk briefly on trading psychology while we reset the link. Okay, I think the meeting was already ongoing before we even joined. Okay, because it was on schedule. All right, so we'll join quickly right now. All right, so trading psychology all boils back down to what you really know about the market and how you can implement it. Okay, all this knowledge you are gaining from this free section The only way it can actually work for you is if you truly understand them and if you can truly identify them on the chart. Okay, if you identify them on the chart is one thing. If you're able to, now it's easy to identify them with past history. Okay, and then it's another thing for you to be actively available to identify them as they unfold in the market. Okay, that is why I would advise you do forward testing and do your demo practicing over and over again.